Hi, my name is Nicole, and today's video is about trading Micro E-mini S&P 500 futures contracts. The Micro E-mini S&P 500 futures contract, or /MES, was introduced by the CME Group on May 6th of 2019. It was specifically designed to provide retail traders and smaller investors access to S&P 500 futures at a lower cost and reduced risk compared to the standard E-mini S&P 500 contract, which is known as /MES. Since its introduction, /MES has become one of the most actively traded futures contracts in the market. Its popularity stems from its accessibility, allowing retail traders to participate in futures markets that were previously dominated by professionals and institutions. So let's bring up the MES futures contract in the Thinkorswim trading platform, and you can see that there's a lot of activity in this contract pre-market here. As we go down, we see the symbol is /MES with the description of the Micro E-mini S&P 500 futures contract. And the software shows a tick size of 0.25 and a tick value of $1.25. So the minimum price fluctuation or tick size for /MES is 1/4 index point, which equates to $1.25 per contract. This means that for every 0.25 point move in the S&P 500 index, your profit or loss changes by $1.25 per contract. So what does this actually mean? If we were to take 1, because we want to figure out how many ticks are in 1 point, and we divide that by 1/4 of a point, I think many of us know that there would be 4 ticks in 1 point. And if we take 4 and we multiply that times $1.25, we get a full point value of $5 per contract. So now that we know that a 1 point move is equal to $5, we can calculate contract size or notional value. To understand what this means in practical terms, let's look at an example. The current value of the index is roughly 56.58. So we take $5 times 56.58, and that gives us a contract size or notional value of $28,290. Another helpful way to think about this is that one MES futures contract is equivalent to holding 50 shares of SPY, which is the popular S&P 500 ETF. This comparison often helps stock traders conceptualize the size of this futures contract. One of the major advantages of futures trading is the extended hours. MES trades nearly 24 hours a day from Sunday to Friday, 5 p.m. to 4 p.m. Central Standard Time, with a daily maintenance break from 4 p.m. to 5 p.m. Once again, bringing up the /MES futures contract in the trading platform, we can see that the contracts are available in quarterly cycles. March, June, September, and December are listed. And these are denoted by the letters H, M, U, and Z, respectively. Most trading activity typically concentrates in the front month contract. And if we take a look here, we can see that the active contract is highlighted and it has 80 days left until it expires. Now let's talk about margin. To place a futures trade, I only need to put up the required trading margin, which is much less than the full contract value. Margin is the amount of money a trader must deposit in order to open and maintain a futures position. And there are a few different types of margin. Initial margin is the amount required to open a position. Maintenance margin is the minimum balance required to keep the position open. And if the account falls below this level, a margin call occurs. And some brokerages have overnight margin, which is a separate, often higher requirement for holding futures overnight. So taking a look here, once again at the platform, we're going to go under the Futures tab and once again highlight /MES. And we can see here that in the right-hand column, initial margin is listed, and the initial margin for this particular contract is $2,100. And it's important to check with your broker for margin requirements, as they can differ across different trading platforms. Several brokerages offer MES trading. Some of the more popular ones include Charles Schwab, NinjaTrader, and tastytrade. When selecting a broker, consider factors like platform usability, commissions and fees, margin requirements, available tools, and educational resources. It's worth comparing offerings before making your decisions. I personally use tastytrade as well as Charles Schwab because I like the Thinkorswim trading platform. Now let's explore why you might choose MES over traditional S&P 500 ETFs like SPY. First, futures contracts offer significantly more leverage. As we've seen, you can control approximately $28,000 of notional value with just $2,100 of margin. Next, tax efficiency. Futures contracts in the U.S. are taxed under the 60-40 rule, where 60% of gains are taxed as long-term capital gains and 40% is short-term. This can offer tax advantages compared to ETFs, especially for active traders. Next, cost efficiency. Futures typically have lower expense ratios compared to ETFs, as they don't incur management fees, and over time, this cost efficiency can result in better returns. Extended trading hours, as mentioned earlier, MES trades nearly 24/5, allowing you to react to global events and news outside regular stock market hours. This is particularly valuable during earnings season or when international events impact markets. And finally, no pattern day trading restrictions. Unlike stocks, futures trading is not subject to pattern day trading rules, which restricts traders with less than $25,000 to only 3 day trades per 5 business days. This provides more flexibility for active traders. Let's discuss some of the basic trading approaches for futures contracts. Day trading. Day trading MES involves opening and closing positions within the same trading day. The smaller contract size makes it ideal for practicing day trading techniques with reduced risk. Swing trading aims to capture medium-term moves over several days or weeks. The nearly 24-hour market allows for flexible entry and exit points. And finally, hedging, which is what I use futures for. MES can be used to hedge existing stock and option portfolios. For example, if you hold a portfolio of stocks and options similar to the makeup of the S&P 500, you can short MES futures contracts to temporarily hedge against market downturns without selling out of your long-term positions. Risk management is crucial when trading futures due to the leverage involved, so let's cover some essential practices. Always size your positions appropriately based on your account size. A common rule is to risk no more than 1 to 2% of your trading capital on any single short-term trade. Use stop-loss orders to limit potential losses. For example, if you're trading one MES futures contract, a 10-point stop-loss would represent a risk of $50, and we get that by multiplying 10 times $5. And market awareness. Be aware of upcoming high volatility events like economic reports or Fed announcements, as these can cause significant price swings. So let's actually go through a demonstration here of a trade in MES in my platform. I'm in my IRA account here, and we can see that the S&P 500 has sold off dramatically over the course of the last month. We've recently bounced, and it looks like we're giving up that bounce today. So my assumption is that the market is going to go down, and I have other positions in my portfolio that are long. So let's just put this trade in and see what happens. We can see here that the buying power requirement is a little over $2,600 to put on that trade. And I am in. So I shorted one futures contract, and I got in at a price of $56.6475. And now that I'm in the position, I'm going to enter a stop loss order. So I'm going to put in a buy order to close out that position. And let's enter probably a trailing stop loss, as this is just for demonstration purposes. And let's put in 10 points, give it a little bit of room to run. And let's pop that order in. And the markets have been extremely active this morning, bouncing around, so I don't anticipate being in this trade for very long. And with a 10-point stop loss, as the trade moves in my direction, the stop loss moves down, giving it a 10-point cushion from the most advantageous price that the trade achieves. So far, so good. Since I shorted the contract, the market has moved down. Minimize that watch list there so we can see a little bit better on the screen. And we can say that the market is moving up a little bit as it's chopping around, and of course it's moving against me. And let's see how this plays out. Now, in a normal scenario, if I were to be using this contract as a hedge against long positions, I may not consider putting in a stop loss. I may have different ways to manage the position. So it looks like we're getting pretty close to getting stopped out. If I highlight that area there, we can see that the stop loss is at 56.71 even. So we're about a point away from getting stopped out. Let's see if we get tagged so you can see what that looks like. And we just got tagged. So you can see that that order automatically executed and got us out of the trade. And unfortunately, we lost $31.25 on this little demo, which is okay. We'll make up for that later. Okay, so that is what it looks like to enter and exit a short trade in /MES. So if you're interested in trading MES, consider opening a paper trading account to practice and start with just one contract when you do go live. I'd recommend developing a clear trading plan with specific risk parameters before trading and keep learning. It's very important to continue learning. Thank you for watching this short video on Micro E-mini S&P 500 futures trading. If you found this helpful, please like and subscribe for more trading content. Drop any questions in the comments below and I'll do my best to answer them. Thanks for listening.